All right, and welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here this week. So markets mostly flat, finishing slightly positive on the week. If we take a look at the weekly candle, you can see we had a slight up week there. Last week closing at 429.54, just a $2 gain for the spiders. And we did come in off the highs towards the latter part of the week. Obviously, the conflict in Israel kind of spooking investors a little bit. You do see it is normal when you see kind of uncertainty, geopolitical uncertainty to markets to come in. We'll talk about that in a second, but we also had some economic data. And it does appear inflation continuing to creep back up as we've talked about. So PPI and CPI both coming in pretty warm. Actually, PPI was much hotter than expected. And again, PPI is a leading indicator. But we didn't see the markets really sell off until Thursday when we got kind of more tensions going on. It does look like there will be an invasion. So we did see investors pull in. And part of the reason why we didn't see selling immediately is if we take a look at oil prices here, we have had a pretty good decline since September 28th. And the CPI, obviously, for the previous month, not taking that recent drop into account. And if we look at gasoline, so you take a look at the RB futures, you can see that has had a pretty good drop as well. So investors looking at that and saying, okay, well, yes, last month's CPI, PPI were hot, but it's not accounting for the recent drop in oil. So we didn't see as much panic right away. Now, ironically, obviously, the conflict is pushing oil prices back up. And again, you're seeing the market sell off. So definitely a little dynamic to watch there. If we look at bonds via the TLT here, that's actually starting to come off the lows here. So we're seeing a little bit of a dynamic change. Bonds bidding off the lows, utilities starting to bid off the lows, even consumer staples were green on Friday. And we're also seeing gold, which obviously we'll talk about in a minute, that's getting a bid. So we're seeing some risk off kind of come into the market here, a more traditional risk off, right? Over the last year or so, it's been dollar up, yields up, stocks down, at least for the most part, stocks down, and utilities down. But a traditional risk-off look is kind of the opposite. It's kind of bonds up, dollar may be up or down depending, and utilities up. And we're seeing kind of a flip to a more traditional risk-off. It's like the market is trying to price in a slowdown or a recession. However, we're seeing crude oil getting a bid here as well on Friday. And again, lots of cross currents, right? This is not a traditional type of risk-off look, although, we're starting to see that come into the markets here a little bit, obviously with with oil being the exception there. Now, for the market here for stocks, typically the rule of thumb is there's an old saying called buy the invasion. So if there is an invasion, usually what you'll see is you'll get a pretty good drop initially. In fact, if we go back to Russia-Ukraine last year, you see we had a pretty good drop. This was at the actual date of the invasion, and you see we had a big sell, and then we recovered. Usually the thought process behind that is central banks are generally going to be a little bit more dovish. Given the amount of geopolitical stress that's going on, they're not going to try and stress out the market or the economy. So generally you see the Fed kind of pivot to a more dovish stance. Doesn't mean that they'll necessarily fully pivot, but that's usually kind of how it goes. So again, if we do have an invasion, which it looks like that's imminent at this point, we'll probably get some type of a sell initially. Is it a matter of do we put in a higher low, or do we take out the lows here and then then can we recover from there? That's kind of the big question I'm looking at right here. But in any case, as far as the charts are concerned, I am looking here in the near term for probably around 425. There is a little bit of support at 428, 429 here on the spiders, but 425 is your bigger level. If we do take out that level, I think this low pivot does get breached, and we could, trade down to 415. It's not that much farther than these lows here, but I definitely have calculated that out. So it's a possible level if these lows give way. But markets here kind of at a pivot point, right? So a little bit of an inflection point. Are we going to make a new low going into the month of November? We do have options X next week. So I would think the market probably holds up for the most part. So keep that in the back of your mind here. But those are the levels I'm watching there on the downside here. And as far as the triple Qs are concerned, they finally came in on Friday as well. And again, this has been propping up the whole market all year. As we know, it's been the Magnificent Seven, and I keep hearing this stuff like, oh, it's not a bear market anymore. It's a bull market. It's been a bull market for a while, but it's really just been a bull market in 7 stocks. And we've talked about this. But here's a really good visual for you if you want. Take a look at, this is the SPX adjusted for inflation. And if we go back to the October lows, you can see we're really just kind of in this channel here. So it's not like this looks a lot more to me like a bear market rally, right? We're, 34.41 here to 39. It's not really that far off the lows. Whereas if you look at the actual cash S&P, much, much higher here. And same thing with the NDX. So again, to me, adjusted for inflation and really looking at all sectors in the market outside of, the top 10, which is heavily skewed into 7 stocks, there really has not been much of a rally off the lows. But nonetheless, triple Qs here, again, you got to respect it. They're holding up. And right now, the high rate environment for these mega cap tech names is seen as a positive because they have such a cash moat, whereas lots of other companies don't. So I think, when this market rolls over, it's going to be the last sector to go, right? The mega caps are going to be the last ones to go. But again, they're holding up for now, and you gotta respect them here, at least for now. But in any case, here's the Qs down 1.25 on Friday. There should be a little bit of short-term support around 360, 362. But if we do get a weekly close at any point below this pivot, there's, again, a really big air pocket down to 320. I'm not sure if that happens right away, but those are the levels I'm watching. You can see we had this nice trend line, perfect trend line hit on Thursday. And you can also see it was a 618 perfectly from the low to the high. So nice level there tagged on the triple Qs, but watching for that 360 to 362 handle there. That should get hit this week. If that holds, then the market likely holds up. Russell 2000 still cannot get out of its own way. So again, continuing this downtrend, testing the 20 moving average on Tuesday and Wednesday, and then rolling right over here, poised to make a new low. I think this has got to go to 165. So we have that head and shoulder pattern there. You see the measured move I've got already done up, and 165, it should get down there. I'm not seeing any reason why it can't. It has not shown any sort of relative strength. And again, going back to breadth and the Magnificent Seven, the Russell 2000 is a much better indicator of breadth for the market. And you can see it's not performed well. Again, going back to last year, look at the October low. This is what, like 4 or 5% off the October low. That's it. And right now, you look at this trend line here, this is in serious danger. If you take this pivot out on a weekly close, this is probably headed to 140. So again, not to beat a dead horse, but again, it's 7 stocks, and we all know that. But I do think this has to get down to 165. Doesn't mean it'll happen right away, but that is what the chart is telling me. Diamond here for the Dow. Another thing that kind of flipped to risk off, right? The Dow's been underperforming lately, but the Dow's a blue chip, a blue chip index essentially. And when you see utilities bidding, you see bonds bidding, usually the Dow is bidding and the NASDAQ is falling. That's kind of the traditional risk off look. And we're finally starting to see that. Again, UNH did report earnings on Friday, so that did help the Dow net out a positive gain. It's a big component there. But nonetheless, Dow stalling out at the 200 moving average and just going sideways here. If this flags and holds up here, this could have one more advance at 342, 343. If it starts to roll over, then again, you can see that measured move there would take you down to that 325 handle. There's a lot of support down here, especially on the weekly time frame. Semiconductors got a bid this week, but ultimately came right back in on Friday, gave it all back. So we went up into the 354 handle, and then we pulled back in, closing right on this trend line again. Short term, there's some support around 145, and there's still resistance at 155, 156, but semiconductors did come back in as well. IGV also pulling in on Friday. This chart is still holding up really well. Near term, we'll say 340 on 340 is support, and resistance is right up at 364 to 365. But that chart is still okay right now. Cloud has actually been a very strong sector this year. Dow Transports just can't get out of their own way here. So look at the downtrend here. I talked about this downtrend last week. We finally broke out of it and then right back down Thursday into Friday. So transports just can't get out of their own way. Again, crude has a lot to do with that. The big surge in crude on Friday Again, these stocks are very sensitive to oil prices, gas prices, and you can see we rolled back right into this, right back below this trend line here. If we do take this low out, I think this is probably headed down to 14,000. So if we take a look on the weekly, you can see that's where we broke out of. You had this pattern here. We were stuck in this range. We broke out of that range, and then you got that upsloping trend line kind of coinciding with that level. But that is kind of what I'm seeing here on the transports, and they are in a lot of trouble here. Got to save those lows going into next week. All right, let's flip over here to interest rates. So not too much to cover. They did pull off a little bit off the highs here, and we look at the 2-year. Still in an uptrend though. But again, it did pull back a little bit this week, and market maybe trying to price in more of a slowdown here. Again, that if we do take the highs out here on the 2-year, that's a huge problem for the market. But right now it's hanging in there okay. There's the 5-year. That's still holding trend right now. 10-year still holding trend. I do think that the long end may have maybe putting in some type of a short-term top though. We're going to watch this next week for lower highs. If this does make a lower high, we're looking at 4.35 on the downside. And the same thing with the 30-year. If this makes a lower high here, we'd be looking at 4.45 to 4.5% on the 30-year. That's just near-term levels here. I don't think yields have necessarily fully topped out, but I think we may have put in some type of interim top. Again, that remains to be seen. If we take these highs out, then that's obviously invalidated. All right, let's flip over to housing. We'll start with XHB as always. Again, XHB coming in Thursday, Friday, like everything else. I told you guys 78 last week. We never quite got there. So again, another lower high for the XHB. And this 200 moving average is now minor. So we came down to it. We got very close. We consolidated for a few days, and now we have a lower high. So don't necessarily expect that 200 moving average to hold. Doesn't mean it can't, but it's now minor support. And I think if you break through that, you're looking at $70 there for the XHB. So watch those home builders next week. VNQ managed to close back above that weekly double bottom, so it needed to do that. But again, this is not a great chart. Very weak here. Again, looking at the monthly as well. Big inside bar pattern. You're trying to hold that 200-month moving average, and you need to close the month above there. That's really what it comes down to. Again, daily rejecting at the 20 moving average. You have to put in a higher low, and you can try it for a higher low up to 78, but this is still a weak chart. And it's telling us there's problems in REITs, telling us there's problem in housing and real estate. XLF here. So we did have bank earnings. I believe Citigroup. Look at that candle there, by the way. Big gap and crap on Citigroup. Wells actually held the gains here, and then JPM a big gap up and also coming back in as well. So kind of a gap and crap there on fins. XLF still below this trend line on a weekly close. Again, you got to put in a higher low here, and then maybe you can go attack 34.25. But if this low goes out, it's going to be problematic. Look at the KRE rolling over sharply on Friday. Got to hold this low. Otherwise, the market is in big trouble. And the same thing with the KBE and the KBWB. These are both large bank ETFs. This, again, barely off of the March lows. Again, this is not a sign of a healthy market. It's not a sign of a new bull market, especially when financials are leading to the downside. Broker dealers here pulling back in Wednesday, Thursday, Friday. Again, that can try and put in a higher low at 470. Still a lot of resistance at 490 and then 500. If we take this low out, it's probably down to about 450. So just be aware of that. But broker dealers up Monday, Tuesday, and then pulling back in into the weekend. All right, oil market here. Again, that big surge on Friday, obviously. We had that slight higher low. So nice pop there for crude. I told you guys this area would be support last week, and look what happened, right? So again, I didn't know that there was going to be an attack or anything when I talked about this on Friday, but the charts told me that this was a support area, and it held. We even back tested it again with a higher low. So oil's in a range right now. I still have a lot of resistance right around $90, believe it or not. So I know we had a big surge on Friday, but there's still a lot of resistance right around 90. And we'll kind of reevaluate it from there. If you get above that, then you can go trade back up to the highs here. But right now, I think oil's in a little bit of a range. You don't want to see this low go out. If that gets taken out, then we're looking at 77, 78. But right now, we're still kind of just ping-ponging in between, 84 and 94. But short term, I think it wants to test 89, 50, $90, and then we'll kind of watch it from there. But big surge there for crude oil on Friday. XLE, again, this looks a little bit range bound as well. I mean, look at the volatility, right? So 2 weeks ago, a 93 handle. Last week, 84 handle. And then this week, back to the 90 handle. Lots of chop here. I'm not doing anything with this right now. Way too tight of a range. You're kind of in the middle of no man's land here. So again, I'll say 92 is resistance now and 85 is support still. But I need to see this pattern firm up before I can do anything with it. But yeah, that looks, these energy plays look to be in a little bit of a range, which is not, nothing wrong. They've had some big gains. There's nothing wrong with some consolidation here. XOP also a nice bid, getting back to that 150 handle. Pretty good gap there, and you held that 50 and 20 week moving average. But again, sloppy chart, and I can't do anything with it. In the short term, the OIH here also held up really well. Told you guys the 20 week moving average. We got a bounce and pretty much a gap and go week. I just, I don't like that big gap there. That may need to get filled at some point. But OIH having a nice week and getting a bid, and, you got to respect it. CCJ, so with uranium, I want to caution here. So I talked about this level. We did close below that breakout bar low on a weekly. So I'm going to say that uranium's probably in backing and filling mode now. Again, that doesn't mean that it's not going to go higher, but I would say probabilities dictate it's going to be in a range for a little while, right? So you have these big runs, big surge, and then you need to consolidate them, right? If you're running a marathon, right, you can't run it all, you can't sprint and then expect to still have energy, right? So you got to consolidate that. But CCJ pulling back in. And again, it got really euphoric, right? There was lots of FOMO going on a few weeks ago, and usually that's going to be a good sign of a top. Doesn't mean it's an all-time top, but again, you're looking at the URNM here. You just need to let these moving averages catch up. You got really extended, some backing and filling. There's nothing wrong with that. That's healthy consolidation. Again, URNM, 6 weeks ago was at 34, and then it went to 50, right? You got to pull back. You got to just consolidate these gains. But again, uranium coming back in here. All right, nat gas also pulling back in a little bit. Again, the same concept, right? 1, 2, 3, 4, 5 days in a row, 25% gains in 5 days. You got to pull back, So we're a little extended from that 20 moving average. That catches up to price. There's no problem. And then this will be headed up to the 4 handle, and then ultimately, really to back test this breakdown at 5. That's where I have this thing going. Look at that base. So we didn't consolidate for 15 weeks just to pop for 2. This move is not over with yet, but nat gas pulling back in, and again, that needs to happen. All right, let's get over to the dollar index. So DXY finishing at 106.67. Still a lot of resistance here at 107, 107.25, but it did pop on Thursday, Friday. And again, it's very strange. So we've lots of cross currents. The dollar index has been, typically the dollar up has meant yields down, yields up, dollar up, gold down. But I mean, taking a look at, the dollar on, or yields on Thursday, Friday, here's the 10-year. They pulled back in on Friday, but they were up with the dollar on Thursday. So lots of cross currents going on. And we'll talk about gold in a second. But definitely lots of changes here in the underlying. So don't think that like these correlations are always going to hold up, right? Dollar was up on Friday and gold was up big. So there's different things that can be risk off at the same time, right? It's not always dollar up, gold down. When there's different dynamics and cross currents going on, these correlations can break down, right? Dollar and gold can trade up together. It's happened before. I've talked about this in the past, but in any case, dollar getting a bid here, holding that 106 handle. We'll see what it does here. If you put in a lower high, then I think it's down to 104.50. If this takes out the highs, I mean, this can clear at a 109.50. And the reason I say that is I know there's a lot of weekly resistance here with this little chop zone and that red bar, but the monthly trend is still very strong in the dollar. And if you get panic and fear out there, the dollar will go higher. So just keep that in mind. But dollar index holding up here. All right, gold. So that was the big star on Friday. Look at gold futures here. I think this was it was a $53 gain on Friday, I want to say. So yeah, 1881 to 1945. It's a big move for gold. Look at the volume there as well, closing back above all the moving averages in one shot. Now gold here, I talked about this level here. You got to the 200-month moving average. I said I don't like that we closed the week below that weekly green bar, but I said the positive here is you have the monthly, and the monthly is more dominant and it's holding up. So again, if you get geopolitical fears, this is going to be a positive for gold. If those geopolitical fears subside, you could see gold come back in. right? So I just want to make that clear. But this did reclaim trend. It is into some resistance here at 1950. If you get through that, it's up to 2000. So gold getting a much needed bid there after the dump. Was that a dump to stop people out? It's certainly possible. I've seen them do that before. But gold holding up really well. Another thing that can cause gold to hold up really well is if the market starts to sniff out a Fed pivot, then gold will tell us before everything else. But I'm not sure we're there yet. But that's also something that we should also keep in the back of our minds. Silver, big pop. Told you guys $21 for a long time. I did pick that up with my traders, and we got a huge gain so far off of that already. Closed back above this trend line. I talked about this being resistance in the short term, and we just blew through that on Friday, right? So near term, we're going to look at 23.50 and then 24. We get through that, then you go to the next level right around 25. But big pop there for silver, and that held that really nice support level again. Just to show you guys, you went into this area here where we tried to break down and we reversed. That's usually where the institutions are going to be sitting, and you're also going to see it was a picture perfect 618. So that's why I had that level pegged for a long time. We finally got there and we pulled the trigger on a long, and that worked out really nicely. Platinum here, a little bit of a chop week. I still think this might have one more drop in it, but I'm watching for pattern. It is very close and it's getting very attractive at these levels. Palladium also needs to get below 1100, and then I start to really get interested in that. If we look at the monthly, you can see that big breakout area, previous all-time high. That's where I want this 200-month moving average. That should be a monster level. Copper here pulling in as well. Didn't take out the lows, but again, we talked about this wedge pattern last week. We did break below it. I think this needs to go test 340, and then we'll see what it does from there. And lastly, Bitcoin. All right, so Bitcoin did close below this green bar low, which negates this bullish inside bar pattern here on the daily. And we also closed below that inverse head and shoulder neckline. So this trend line's invalidated, and I'm going to defer to the weekly, which is a bearish inside bar. So Bitcoin, if you take this low out here, it's set up for a move down to 21.5. The positive for Bitcoin right now is that you still have this nice monthly pattern. So as long as that monthly pattern holds up, this can push higher, but I would think that this needs to start to get going like this month. There is kind of a thing where it's, if it takes too long to break out, it's not going to break out, that type of deal. And I think it's had more than enough consolidation here. So I'd like to see this, if it's going to break out, I think it needs to do it in the next month, at least the next month to 2 months. So, but again, it's hanging in there. It's trying to hold up, but I don't like how you lost that breakout bar low. And I don't like how we close below that inverse head and shoulder neckline. So, and you're starting to set up a minor bearish inside bar here on the daily too. Could be a setup for a move to 25 too. And again, if you take that pivot out, there's not a lot of support down to 21.5. So just be careful with crypto here. All right, lastly, to wrap up, again, let's take a look at the spiders again. So again, short term, we're looking at 425. That's kind of your big level here if this trend line doesn't hold on the downside. If we can put in a higher low and take out the highs, then I think there's a likely chance that we've got a low in for maybe the next couple of months. But if that fails, I don't think these lows hold, and I do think we need to go down and test kind of the 415, maybe 413 area on the spiders. That should be very good support. Again, we'll see what we get here. Again, be very careful in this market. Lots of cross currents going on. We do have Options X coming up next week, so there should be a lot of whipsaw. And be careful when gold is rallying and oil are rallying at the same time, and the dollar index is rallying at the same time. It means there's trouble ahead. And lots of turbulence going on in the market. Anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. Talk to you guys all next week.